Good evening and welcome to tonight's strategy of the week titled, How to Heal a Broken Portfolio. Dr. DiLiddo has always said that watch lists are one of the most powerful tools within VectorVest. Not only can watch lists help you better manage your portfolio by weeding out the bad stocks that may be weighing your portfolio down, but it also helps determine what type of investor you are. In Chapter 11 of Dr. DiLiddo's little green book, Stock Strategies and Common Sense, he lays out what he calls the investment matrix. Let me show you that matrix. The investment matrix separates the four different investment styles. We have prudent, aggressive, conservative, and speculative. And each are determined by the potential reward for investing in a stock compared to the level of risk you're willing to take to receive that reward. And each of these styles looks at the relationship between RV and RS, relative value and relative safety. Let me talk about RV and RS. First off, they're both fundamental indicators and both on a 0 to 2 scale. Above 1 is good, below 1 is bad. RV measures the long-term price appreciation potential compared to a safer investment in a AAA rated bond. So RV again is the long-term upside potential over the next 1 to 3 years. Relative safety is an indicator of risk. It looks at consistency and predictability of financial performance. How well does this company grow their earnings quarter over quarter over quarter, year over year over year? So let me start with the aggressive investor or trader. If you're an aggressive investor, you ideally want stocks with an RV of above 1 and an RS of below 1. You want the long-term upside price potential, and you are willing to take on a little bit more risk to get you that reward. You want stocks that have the ability to move up and down in price quickly. If you're conservative, you want the RV to be less than 1 and the RS to be greater than 1. You might be saying, well, why do I want RV to be less than 1? Why don't I want the upside potential? Well, if you're truly conservative, you're more concerned with capital preservation than capital appreciation. And if you're a prudent investor, you really want the best of both worlds. You want that upside long-term potential, but you're not willing to take on too much risk to get you there. Finally, there's the speculative investor, and these are the investors who really like to short stocks. They're not concerned with fundamentals whatsoever. They're very news-driven. They're looking for a company to release the next big product or that has had a favorable court ruling. So they're okay with investing in stocks with poor fundamentals, RV and RS less than 1. So this right here is very important for you to understand. You may think that you're one type of investor, but the types of stocks you routinely hold in your portfolio paint an entirely different picture. Let's now move into the program. I'm going to move us from the home page. I'm going to click on the Viewers tab, and I've already created a group here called 00 SOTW for Strategy of the Week, and I've created a watch list called Healing a Broken Portfolio. I'm going to close this double arrow here down just to give us a little bit more room, and I'm going to detach this viewer screen so that we can see all the stocks listed here. We'll notice at the top we're looking at 20 items. 20 items were found, so there's 20 stocks listed here. And when you create a watch list, the stocks are not put in here in a random order. They're immediately sorted by our master indicator, and that's VST. So the stocks at the top of the list have the best combination of value, safety, and timing, and the stocks at the bottom of the list have the worst combination of value, safety, and timing. So let me first start by talking about what we're seeing here in this spreadsheet. I'm going to come up to the top and click on Stream just to disable the real-time feed. And the first set of indicators, or the first set of columns here, are industry standard. It's the same information that you would get if you go to Yahoo Finance and type in a bunch of symbols. First you have the company name, the symbol, the exchange. If there's an X next to the exchange, means the stock is optionable. N is for the New York Stock Exchange. O is for the NASDAQ or over the counter. If there were an A here, that would be for the American Stock Exchange. We have the current price. Now again, I stopped the data feed, so we're looking at today at 2:14 p.m. You also have the dollar change and the percent change in price from the previous day's close. So again, up to this point, you're seeing information that you would get pretty much anywhere else. The next set of indicators are very unique and specific to VectorVest, and this really is what separates VectorVest from the pack. The first indicator you have here is value. Now you've heard value before, and other services compute what they feel is the current worth of the stock. Well, we compute value a little differently. Value is computed from forecasted earnings growth, forecasted earnings per share, profitability, and also interest rates and inflation. And we feel that value will increase when earnings go up and interest rates and inflation goes down. So one of the first things that we believe every investor should know is what their stock is really worth. And this indicator here gives you the current worth of the stock. The next four indicators are on a 0 to 2 scale. Above 1 is good, below 1 is bad. I've already talked about relative value and relative safety. Remember, these are fundamental indicators. The next indicator is relative timing. RT measures the stock's short-term price trend. When it's above 1, stock's generally in an uptrend. When it's below 1, stock is generally in a downtrend. And RT is such a smart, fast, and accurate indicator of the short-term price trend of the stock. So what we do is we combine relative value, relative safety, and relative timing into a single comprehensive indicator, and that's VST. And again, we're sorting this watch list and any watch list that you create by VST. I'm going to get back to the recommendation in a second. Let me talk about our stop price. VectorVest puts a stop price on every stock every day, and the stop price is an adjusted 13-week moving average of closing prices, and it's adjusted for the fundamentals of the company. So if a company has good fundamentals, and I'm going to pick the top stock here, Thor, we can see that both RV and RS are above 1, so we know right there that the company has good fundamentals. If the company has good fundamentals, what we'll do is we will lower that stop price to keep you in that stock longer. Fundamentally sound companies tend to go up in price steadily over time, and we don't want to bounce you out of stocks too quickly. If a company has poor fundamentals, I'll go down to the bottom and I'll choose the last one, RLD. We could see that both RV and RS are below 1. So if the company has poor fundamentals, we will raise that stop price to get you out of that bad stock sooner. You can see the stop price is $13.52 and the price of the stock is $13.84. So with that stop price, VectorVest gives every stock in the database a buy, sell, or hold recommendation. And let me start with the sell recommendation. I'll go right up above RLD to CNX. You'll see it has a sell recommendation. In VectorVest, for a stock to get a sell recommendation, all that has to happen is the price of the stock has to fall or be below the stop price. No other rules need to be met. Once the price falls below that 13-week moving average, we give the stock a sell rating. For a stock to receive a buy, it's a little more difficult. 4 things have to happen for a stock to receive a buy. First, the RT has to be above 1, so the stock has to be in an uptrend. Next, the VST has to be above 1, so there has to be some fundamentals behind that uptrend. The price of the stock has to be above the stop price, and also the price of the stock has to be diverging away from the stop price. So again, it's a little difficult for a stock to receive a buy recommendation. And for a stock to receive a hold, the price of the stock must be above the stop price, but one of the other 3 factors to receive a buy are not met. So in this case with Ace Limited, the price is above the stop, both the RT and the VST are above 1, but the price of the stock is not diverging away from the stop price, it's converging towards it, thus giving it a hold recommendation. So you may hear on TV or from so-called gurus that you need to spend an hour a day on each stock in your portfolio. Let me show you how you can analyze any stock in just about 10 seconds. Let's pick the third one from the list, Capstone Paper. Price of $40.63. We think it's worth $47.20. So far so good. You have a stock that is trading below what we feel it's worth. Relative value of 1.15 is favorable on a 0 to 2 scale. So This stock is likely to outperform a safe investment in a AAA rated bond over the next 1 to 3 years. Relative safety, it's a little safer than the average stock in the database. Relative timing of 1.77, stock is in a very strong uptrend. It has a favorable VST of 1.40 and it currently has a buy recommendation. Let's take a look at one of the stocks at the bottom, Consol Energy. Price of $27.22. We think it's worth $16.09, so not a good start. It's trading much higher than its current value. How are the fundamentals of this company? Relative value of 0.66, unfavorable, so we feel that it's likely to underperform that AAA rated bond over the next 1 to 3 years. Relative safety at 0.96, so it's a little riskier than the average stock in the database. It's definitely falling in price. It's got an RT of 0.60. It's got a VST of 0.75. It currently has a sell recommendation. It's got an earnings growth rate of -7% over the next 1 to 3 years. So forget about spending hours a day on each stock in your portfolio. We do the work for you so that you don't have to. So I talked earlier about the investment matrix and how that matrix helps determine what type of an investor you are. So if this is your portfolio of 20 stocks, you can look right down at the bottom to the watch list average to help you determine your investment style. You can see that the average RV is at 1.13 and the average RS is at 1.10. So if this were the stocks that you currently owned, you would be considered more of a prudent investor. And if you continued from left to right, you can see that the average RT is at 1.26. That's good. It's above 1. VST of 1.20. The average earnings growth rate is at 11% per year. It has an average EPS of 3.38. It has an average dividend yield of 1.50 as well. So overall, not a bad portfolio. So what you did is you most likely did your homework and analyzed these stocks for their fundamentals. You favored high VST rated stocks. Well, we feel that VST is a great indicator for determining which stocks to buy, but now that you own them, you're probably not concerned so much with their value and safety anymore. The most important thing to you right now is, are you making money or are you losing money? Are the stocks going up in price or are they going down in price? The one indicator that we have here that looks at the price trend is relative timing. So what you should do is come up to the top and click on RT. What that does is it resorts the list by short-term price trend. And when you sort by RT, the first thing that you want to do is you want to identify the stocks that have an RT of below 1. And we can see that out of the 20 stocks that we have here, we have 3 stocks that have an RT of below 1. So it's not the stocks at the top of the list that you have to worry so much about, it's the ones at the bottom. For the most part, the stocks at the top of the list are the ones with buy recommendations, and these are the stocks that are making you money. It's the ones at the bottom that are weighing your portfolio down. So the first thing that you're going to want to do is start at the very bottom of the list. So we'll start at the bottom with CNX. We already analyzed this stock. We said that it was overvalued with poor fundamentals. It was definitely falling in price with an RT of 0.60 and it had a sell recommendation. What I'm going to do next is I'm going to open up a graph and I'm going to give you 4 tips to help you determine when you should sell a stock. I'm going to right click on that stock and I'm going to view the stock graph. Now what we're looking at here is end of day data over the last 1 year. The price of the stock is represented at the top here in candlesticks. The purple line is a 40-day simple moving average, and the relative timing of the stock is at the bottom. The first thing you want to identify when opening up a stock graph is price volatility. You want to ask yourself, is the price behavior that you see here conducive to your investment style? Well, right off the bat, I see a stock that moves up and down in price very quickly. There's a lot of volatility here over the last 1 year. We're looking at a stock that's at $27.21. So the overall price trend over the last year is down. So that's the first thing. Is volatility conducive to your investment style? If you're a prudent investor, I would have to say that this is a stock that's way too volatile for your portfolio. Number 2, we can see recently that the price of the stock has just fallen below its 40-day simple moving average. when a stock's price falls below its 40-day moving average, that generally gives you an early warning sign of possible trouble to come. Right around that time, and this brings me to tip number 3, the RT of the stock fell below 1. So this lets you know that the short-term price trend is down. And then finally, I'll come down to the bottom left, click on recommendation. Anytime the stock gets a sell recommendation from VectorVest, that should be your last line in the sand. There are opportunities, like I had just mentioned, to sell a stock before it gets a sell recommendation. Price falling through the 40-day moving average, RT crossing below 1. Maybe you're using a trailing stop of some sort that will get you out of this stock before it gets a sell recommendation. But if ever you're holding on to a stock and it receives a sell recommendation from VectorVest, you should begin to reconsider why you bought the stock in the first place and also why you're still holding on to that position. If I close out of this graph, and we have another stock at the bottom that has a sell recommendation. This stock is a little different than CNX. AEM is undervalued. We can see the price is $27.75. The value is $39.77, so it's undervalued. It's got pretty good fundamentals. The RV is at 1.50 and the RS is at 1.10, but the relative timing is at 0.60. So this stock, even though it's a fundamentally sound company, is currently falling in price and it has a sell recommendation. Let's take a look at a graph of this stock. Okay, we can see in July and August and September of last year, this stock had a great run. It stayed above its 40-day simple moving average. It hit a high here of $57.35 on November 26th. Not too long after that, the price of the stock fell below its 40-day moving average, and it actually used the 40-day moving average as resistance, and it has steadily stayed below that 40-day moving average since. So when the price crossed below its 40-day moving average, that gave you an early warning sign. Not only that, let's take a look at this. I'm going to click on the recent high here on November 26th. So the stock price actually hit another new high. However, look at the relative timing. The relative timing, as price was rising, started to hit a series of lower and lower highs. That tells you that this upward price momentum is losing steam. Price is deceptively rising because it's not rising at the same rate that it was back here in July and August. So this bearish divergence really throws up a red flag for you to say, I'm not sure how long I'm going to hold on to this position if the stock begins a new downtrend. Again, we know it's a fundamentally sound company. It has a good RV and a good RS, but even good stocks will start to fall in price as the overall market starts to fall. So price crossing below its 40-day moving average, you see a clear bearish divergence here between the price of the stock and the RT. If I go down to recommendation, it got a sell recommendation back here on January 25th, and that should have been your last line in the sand and an opportunity to take your profits at that point and move on. And we can see VectorVest gave this stock a sell recommendation right about $45, $46, and it's currently trading at about $27.67. So that would have been a great opportunity to exit out of this position. Another thing that you want to do with the stocks that you're considering selling is compare the price performance of the stock to its industry group. We're looking at the mining, gold, and silver industry. If I come up to the top left here, click on stock and go to industry, not only was the price of the stock starting to fall, but the industry actually started to fall well before that. We can see back on September 14th, the industry hit a high here of $10.13. It crossed below its 40-day moving average and has steadily stayed below that 40-day moving average. So analyzing the industry group will also help you determine when to sell a position. If you analyze this industry group and saw that the price of the industry fell below its 40-day moving average in October, and not too long after that, the RT fell below 1, that really paints a clear picture that there's something going on here with this industry group. Birds of a feather flock together. Even the best stocks within the industry group will have a tough time surviving when the industry group starts to take a dive like we see here. So what you want to begin to do is start weeding the garden. You want to start getting rid of the stocks at the bottom of your list that are in the strongest downtrends that are weighing your portfolio down. So if you just right click on them, click on delete, you'll start to improve the overall health of your portfolio. And over time, as you get rid of those low VST sell rated stocks, I'm going to close out of the watch list section and I'm going to open up the stock viewer. The stock viewer is the best place to start thinking about replacing stocks once you start to get rid of your losers. And the stock viewer holds the stocks with the best combination of value, safety, and timing. We're looking at 7,979 stocks now. And again, if you are a prudent investor, you want to focus on the stocks with high RVs and high RSs. And P.S. We will be holding a live Q&A webcast this Monday at 12:30 p.m. Eastern Time to discuss tonight's strategy of the week. To register, you can go to www.vectorvest.com/events or click the link in the views tonight. Since this webcast is for members only, you will need a password to enter once the webcast begins, and the password this week is WatchList. I look forward to seeing you all there. So not only have I shown you how to determine what type of an investor you are, but I also gave you a few tips to help in knowing when to sell some of the losing positions that are weighing your portfolio down. This concludes tonight's Strategy of the Week presentation. Have a great weekend.